Hey, what's happening, guys? Dan Darrow here with another Options and Play video update. Something I've talked about many times and usually comes up in videos around earnings season is the idea of sympathy trades, right? Those are closely correlated stocks that move together, right? And what we're looking to do is design option trades to take advantage of the catalyst on one stock by looking to get a big move on another stock, but not paying for the same type of event premium, right? So that's what I consider a sympathy trade. I talk about that. Usually comes up, around earnings season each quarter because it's a really key idea, and it's definitely like a main style of trade I like to focus on around this time, right? When we have like a ton of like big reports coming out day after day after day. And Snapchat today is just a really great example, and it kind of like drives the point home, like why sympathy trades can really be or create some like awesome opportunities, right? Because um, most people are familiar with Snapchat, right? And I mean, I don't need to explain what Snapchat is. So, like when Snapchat reports, you know that there are a basket of say social media names that will probably respond to it, right? I mean, like Snap, you have Twitter, you have Facebook, you have Pinterest, right? And maybe even like say like a Google for like a YouTube, right? So people are obviously familiar with what Snap is, who the main players in the industry are, and what's interesting is that sometimes like people say what's good for one is bad for the others, but often, and at least so far this year, what's good for one, and in like Snap, this happened in April. You saw a huge move in the stock. So you saw in April when like the stock crushed earnings, it had a huge move, and it dragged basically all of them up with it, like Facebook, Twitter, Pinterest. They all went along for the ride. So as we were heading into earnings yesterday, if you think Snap is going to have a big move, right, then what you could have looked at would be, say, options on Twitter, right? You can see Snap crushed it. What happens to Twitter? Twitter pops and rallies, right? Or say Facebook, right? Facebook pops. And this is even more remarkable because it's a huge market cap, right? Look at the size of the move on his reaction to the Snap earnings on Facebook. Pinterest, same idea. Huge pop after Snap crushed it, right? So you say, okay, that's great, right? But what's the whole what's the whole benefit here? It's because Snap was the one reporting earnings, and most of these, actually all the ones I just highlighted, don't have earnings this week. So with weekly options, right? So options that expire this Friday on Facebook, on Pinterest, on Twitter, right? They're not pricing in that event catalyst because they don't have the earnings report this week. For most of those, the earnings are next week. So like next week, the options are going to be very juiced. But for options this week, they weren't priced to the same extent, right? Snapchat had earnings; they were pricing in an earnings report, right? Pinterest, Twitter, Facebook, they weren't pricing in a huge catalyst because their earnings aren't until next week. So it creates this opportunity where if Snapchat, I'm not, I don't know for certain that Snapchat's going to have a huge move, right? But if they do, then odds are these other names are going to be moving off of it. They're going to be reacting to it, right? And then you get a move in those names, but you're not paying the same event premium, right? And that's why these sympathy trade ideas to me are just so interesting around earnings season because you get like the moves off of, you get one stock reporting, you get a move in another area, and if you can get options that are priced maybe 50% less, 25, 30% less, it still presents like a good tradable scenarios, right? And it comes up all the time. It's not just Snapchat. It's not just like the social media names. I mean, it happens in a lot of like the semis. I mean, it happens in software. It happens in all sorts of different areas. So it really pays to do a little bit more digging, do a little bit more research, figure out where those correlations lie, and see if you can design option strategies around it. Because sometimes you can really end up getting like nice trades without having to pay for all that event premium. All right. So, if you like this video and you're looking for more information on sympathy trades, like correlation trades or earnings trades with options, please follow up with the link in the description of the video for more information on options and play. I hope you have a wonderful night. Stay well, and I will talk to you all tomorrow.